Good morning. Happy Monday. It is Monday, April 28th, 2025, and we're here to break down the current state of the market and help you see through the noise. I'm very excited to be here and happy to be getting to trade with you today. Today in our state of the market, I'm going to walk you through what's going on with the S&P 500, where my three levers, right? Bonds, Russell 2000, and the VIX are kind of falling in place right now. We're going to look at some levels. We're going to talk earnings, and we're going to hit on events. So we've got a lot to cover. So let's dig in. All right. So ignore Sedge. That is one of my short squeeze stocks that is blowing higher that I'm going to be talking about very soon, folks. Don't worry, but I've been working on something fun, and I can't wait to share it with you guys. All right, so the SPX, we're up 2. We had a really, really nice week last week. Monday started off kind of soft, but we just really rallied all week. S&P is sitting 55.28. I believe we're eventually going to link up with the 50-day moving average. Currently, it's right around 56.20. My thoughts are we'll be like, 5,600-ish when we run into it. But I do like the market higher this week. There's not a lot that I believe is going to shake things up other than economics. We have a lot of economic announcements this week that are very important. So I'm going to go through those, and then we'll get into my levers. So nothing today, but tomorrow we start getting retail and wholesale inventories. We get the home price index. We get GDP on Wednesday, consumer spending, personal income, PCE index, PCE year over year, core PCE, just a lot. On Thursday, we get ISM manufacturing, which is big, construction spending. Those are big, big deals. And then the granddaddy of them all, non-farm payrolls are on Friday. Current expectation for non-farm payrolls is only 130,000 jobs. So that is, we are just chock full of news this week. News that could move things. So if the news goes okay, that's where we get to 5,600. So what is going to determine whether the news went the way we want? Starts with bonds. They are flat today, off the bottom, sitting at the 21-day moving average. And, flat on the day. All right. The 10-year, so kind of IEF is going to be the long bond, the 10-year, which is the kind of standard bond. I mean, it's in a fine place. Not having some of the same trouble as the long bond. And so bonds continue to be the key. If you're not watching the bond market, you're not watching the market. If bonds are stable, the market goes up. If they start selling off, the market starts selling off. It is that simple. All right, now let's look at VIX. This is our next kind of lever. Now, one thing to be aware of with the volatility index is that there is a weekend adjustment around it. So I don't want to get too deep into the woods with VIX, and I could. If you let me, I could do 2 hours on VIX, and you would understand maybe 4 words of it. But one of the mechanics behind VIX is that Mondays, it's going to be up about 3/4 of a point. And then that 3/4 of a point kind of fizzles out throughout the week. We're currently up 0.3%. So that means adjusted for the weekend, VIX is actually down. And it's now 25. So it's, a reasonable level to where we've been. And most importantly, this is huge. Look at the front end of my curve. Right? So the index is up here. And then below is the futures. And these are kind of guessing where VIX is going to be in a month, 2 months, 3 months. And this is flat. You got about 10 basis points between June and May. And June is actually trading below July. So our curve is looking a lot better and starting to tell us, hey, that 25 VIX that might not be there for very long, Mark. You might want to do something about it. And we are. This is the setup to start thinking about how I want to be positioned for the VIX to drop below 20. Yes, you heard me right. How do I want to be positioned for the VIX to fall below 20? Then when we get there, I'm going to ask myself, how do I want to be positioned for the VIX to get to 15? All right. So there you have VIX really looking positive. Last but not least, we have the Russell 2000. And lo and behold, it is leading. The Russell 2000 is leading us higher. How many times do I have to say we want the Russell 2000 to be leading? And it is. And it hit a new recent high. But there's tons of room for the Russell 2000 to rally more. it is still bad despite the outperformance today. It is badly underperforming the rest of the market over the last 3 months, over the last 6 months, over the last year. And, I mean, 2 years, yes. But really, it's this last year that has been really bad. All right. The Qs are up 9% year over year. Even the boring old Dow is up 5%. SPY's up almost 8. And here you have the Russell 2000 still down. So I like the Russell. If I'm going to be long an ETF this week, it is going to be the Russell 2000. And, because it is telling me so. All right. Today is a day where kind of everything is up, but you don't have leadership from the Mag 7, right? Apple is flat. Amazon is flat. Microsoft is mildly down. Meta is up small. Broadcom is down. NVIDIA is down. So we have an up market, but it's everything else. Energy, materials, you name it. So, markets look healthy today, even though it's an inside day. Now, remember, an inside day is when the market is moving a lot less than we are used to. I would say up 0.5% inside day. And that is what you are getting out of this market. All right, now, tomorrow, you will be joined by me and Leisha because we are asking ourselves, how far can this go? Now, I'm looking at simple moving averages, and those make some sense to me. But Leisha is going to be walking us through pitchforks and where major points of market strength and resistance lie and how we should trade it. So if we're thinking, you know what, the market's calming down, I don't need to go to see Mark in the morning anymore. Well, now you have a double reason to come tomorrow because Leisha is going to tell you exactly the targets that you're going for. Leisha is going to be doing a mini masterclass on trading pitchforks and candles and things like that, and it's totally worth your time. Give my team a call. So we did the kickoff for my masterclass on Thursday. It went great. We had a good time. They gave me all kinds of good ideas on things I need to cover. And it's sold out. So now we're motivated to potentially do a second masterclass, things like that. If you're interested in the class, give my tip. We might be able to squeeze you in, and you could talk to them about Leisha's masterclass as well. And the number to call is 888-872-3301. That's 888-872-3301. Or if you want to join Leisha, you can join the Queen of Pitchforks above, the Queen of the Candles, and you'll get a lot out of that. And I'd like to remind you that immediately following this, we are going to be doing our ticker highlight show in this room. All right. So things are looking positive. If you're a bull, we had an entire week of things being constructive. But there's still, again, a lot of risk out there. All right. I laid out the economic factors, but we also have earnings. Now, so far, so good. Google earnings were pretty nice. Tesla has been a beast. I'm getting ready for my Tesla trade. It's not getting to the vol level that I want. And when I say vol level, I mean option prices. The option prices are still pretty elevated. So I'm waiting for them to get a little bit cheaper, and then we're going to be diving on board. But Google had great earnings. Now, again, we want to see these premiums fall below 25, and then I'm going to start getting interested in Google. Then I'm going to start being interested. So the earnings we have this week, Meta is on Wednesday. You know, I showed you what I look at for earnings. They're pricing at about a 7.5% move. It's above normal, but of recent history, it's about in line. So Meta reports on Wednesday. Microsoft also reporting on Wednesday. Another big one to watch. Currently, they're pricing at about a 4.5% move. Again, that is in line with recent history. I don't think it's necessarily expensive. But we're not done there yet. We have Apple earnings. Now, Apple is the one that I think could be a real, if there's a hiccup in the market, it's going to be coming from this guy. They're pricing at about a 4.2% move. As you can see, in line with kind of how we've been of late and against the long-term median. But Apple has not had a lot of big movers of late. So take a look at this column here. This is how much they actually moved. And we've had kind of 3 occurrences where it moved more than 4%. 4 of the last 12. So you have a low chance of it making a massive move. However, if it makes a massive move, it is not going to be because earnings were good. If Apple is going to move more than we expect, it is not going to be a good thing. All right, so let me walk you through what I'm looking at. Justin, you can clip this. So Apple reports on May 1st. That is Thursday after the bell. The long-term implied move on Apple is about 4.25%. They're pricing in 4.2. Perfectly in line. Recently, it's been moving less than we expect. It has had some moments where it's moved big, though. Look at the stock chart. You're not even really seeing a big increase in option prices into these earnings. That will change as we approach. So the option prices will start to go up as we get closer to Thursday relative to the stock. But right now, if you're interested in Apple, it is not expensive to own options. And you will not be paying a lot of carry on that. All right, now we're also seeing movement decline, which when you consider how much we were moving, you kind of expect still moving almost $8 a day. And heading into this week, with the stock trading 209, they're pricing it to move in raw dollars about $10.50. If it gets a move, and remember, they're not pricing in a big move. The stock, despite all the pain, not far off from its all-time highs. This company is still worth over $3 trillion. So if we get a big earnings move, it is going to be to the downside. It will not be to the up. Could Apple go up? Yes. If I like Apple and I own it long term, I'm going to sell cover calls against my stock into earnings. If I'm really looking at it, though, there is a real chance that Apple is the eyesore out of the Mag 7 earnings. All right. So just be cautious. Thursday night could shift things if Apple earnings are really bad. So there you have it. So Apple gives me pause. All right. We're already through Broadcom earnings. NVIDIA earnings are not for a few weeks. We're through Tesla. We're through Google. We just have Amazon that also reports on the 1st. Now, if there's a stock that is going to move on earnings and potentially to the upside, I think it's Amazon. They're pricing at about a 6% move. It has moved. Yeah, I mean, it tends to not underperform that much or outperform that much. So I like Amazon higher, as you guys know. But I will probably sell my calls on Thursday ahead of these earnings, despite the fact I think Apple's going to pop or Amazon's going to pop. Why? It's earnings. We trade to them, not through them, and then we trade after them. Now, heading into earnings, I would expect Amazon to rally. I'm looking for potentially $200 by Thursday. All right. Real brief check on VIX. We are now flat officially. So this changes my behavior. This changes my behavior. Bonds are still going up. VIX is flattened up, and the Russell is leading big. So you have a really interesting setup here from a vol situation. I can't wait for Trading Desk and Delta Strike because, like I said, everything about the market is kind of shifting as we're watching. This is fascinating to watch. If you're not a VIX watcher and a bond watcher, you need to be watching those because they're very informative about how this market is going to behave. I mean, we're here on a Monday. VIX is 25, and it went red there for a second and may go red again. I mean, there is some real pressure on implied volatility today, folks. All right. So what are my thoughts on the day? And then I will give us a 1-minute break before ticker highlight show. I believe that will meander higher as the day progresses. You'll probably see a little bit of a bid come into Apple and Amazon and Google and all those names as the day progresses. And still going to be an inside day, but my guess is the S&P closes near 5,500. 5,550, excuse me. I'm looking for the S&P 5,550. I think the Qs will get to green on the day. Maybe that's about it. And you'll get the Dow up probably 300 points by the end of the day. Getting a nice recovery in a lot of Dow stocks. And, interestingly, equal weight S&P is outperforming the S&P. So that tells you that this is a broad market rally. Everything is moving up. And yeah. So what am I doing this week for now? Now, I currently already own these, and I've talked about it. I own the 195 calls expiring next Friday. Or next Monday. Excuse me, the 5th. And I like the Russell 2000 to be strong all week. I'm looking for $200 a share. All right, folks, it is 10:28. The Ticker Highlight Show will start in 2 minutes. So I will be right back with you, and we'll dig into our Ticker Highlight Show trades and talk about what we, other perspectives from other traders. So stick around. I will be back in exactly 1 minute for the Ticker Highlight Show. Once again, if you have interest in Alicia's masterclass or mine, for Alicia, you can click the link above the chat. If you want to join the masterclass, we can see if we can kind of squeeze you in. The number is 888-872-3301. Talk to Ted, Drew, and Zach. They will take very good care of you. All right, folks, we'll be back in 1 minute for the Ticker Highlight Show. I'm Mark Sebastian. I am your only option. Good morning, everybody. Good afternoon to my friends in Europe. I am Mark Sebastian. I am your only option. I am joined by the Queen of the Candles, Alicia J. Leslie from the kitchen. I am joined by Andrew T. for Too Much Fun Giovinazzi, and he's in his office. Hold up. Apparently your heat's not working again. And, of course, our Imperial Overlord of Income, the man, the myth, the legend. Hi there. The man, the myth, the legend. He is our income aficionado. He is Hans J. Albrecht. Good morning.
He's 6 for 6. His first 6 trades. 6
That
for
is
6.
Incredible.
Congratulations, Hans. That's fantastic.
We are
pretty good.
Normally, obviously, we're in interesting times. As the Chinese would say, may you live in interesting times. We are certainly living those. And we are seeing the market kind of mixed. And, right now, the NASDAQ's down, the Dow is up, the Russell's up. VIX, weekend adjusted, is down. Vol's coming in. And there's been kind of a key shift over the last couple days in just the volatility feel of this market. I don't know if you guys sense that. Like, the market's just tired of news.
Yeah.
And it's just powering through it.
I agree.
I'm feeling sensing that.
Andrew, you literally look like you're freezing.
Well, you know what's funny is the heat does work. I just opened my office door. So I'm actually not freezing, but I opened my office door. I wanted to get some fresh air in the office.
All right.
It's actually nice out.
So for this week, now we're gonna get back to our format once the market. Normally, we would break down one stock and we'd all kind of give our take. With the market the way it's been, that's been a real moving target, picking one name because things can fly around so much. So I asked everybody to kind of give a brief breakdown of where they see the market and what's happened, and then a name that they like. Now, for me, I broke down I've been, if you watch my State of the Market show I've been breaking the market down into 3 levers: bonds, VIX, and Russell and small caps. Today's the first day those have really come together and really doing their stuff. Bond market looks pretty strong. VIX is getting absolutely annihilated, and the vol futures curve is flattening up. And the Russell 2000 is leading us. And I gave you a simple plan. I like the Russell 2000 195 calls for Friday or May 5th, either Friday or Monday, because I believe the Russell is going to hit 200 by the end of the week, probably a little bit higher than that. I like it to lead us this week. It's going to be an interesting week with all the earnings, but that's where we are. Now, Alicia laid out kind of how she sees the market. I'm going to let her go through that. And then her stock was a stock that did not have a great week last week. And maybe she's looking to take advantage of that. So, Alicia, why don't you walk us through what you're looking at?
Sure. Good morning, everyone. Let me add my screen. There we go. I just want to point out every index except diamonds has crossed that downtrend line. I was watching for ES. Friday was kind of questionable. This morning, we have it happening. SPX is over. Look at how well I cleaned up my SPX chart. Look how beautiful it has followed that pitchfork.
Oh, wow.
That was the bottom. The bottom.
It's weird how that works like that, Lee.
Isn't that amazing?
Who knew? Who knew?
Q's looking good. I agree, Mark, with you. IWM's looking good. I am bullish. The only thing that has not crossed is the diamonds. They're close, though.
Yeah.
Not there yet.
They have a United Healthcare / IBM problem that has been problematic for the diamonds.
Right.
Speaking of IBM, I know that my rule with gapping is you wait a couple days. I think the fact that IBM is holding my median line here and the rest of the market's picking up some steam, I think you're going to see IBM close that gap. That's
good.
What
we're
I'm
long we're long that in our pro session.
You're looking up to 238.61.
Call calendars.
243.66 closes that gap.
243.66. You heard it here.
And you have a nice stop loss there on the median line, 229.40.
So you've got big upside and a tight downside stop. You're looking for about $10 upside, and you're only willing to risk about 3 on the down. Makes total sense. Right? Yeah, that's great risk reward. You're getting about 2-to-1 risk reward. You couldn't ask for better than that.
And look how well it's followed this pitchfork. So
yeah,
I'm trusting it. That's my idea.
I like that idea a lot. Andrew, what do you got?
Let's see. Am I sharing my screen here? I think I did. Have I done this before?
Look like it, Andrew.
Have I done this before?
Only a million times.
I'm not sure, Andrew. Sometimes I'm not sure.
Also, is everybody feeling a little more bullish or more bearish? You want to fade this rally? Put your comments in. Put your comments in. We want to see what because I got a lot of savvy traders in here. I want to see what everybody's thinking. So this was my stock. I bought some more of this stock on the dip, and I'm actually kind of looking to buy some calls. So,
and the stock is Pinterest?
Pinterest. I guess that would help. So I don't know what happened. Everybody loved it. It was $40. Probably cheapest social media property out there. People love it, making lots of money, and 35% off sale. I bought a bunch more down here. I'm also just going to go buy some calls. Sometimes I just don't try not to make things too complicated, but 31, 32 calls here. The stock was $40. No, they haven't announced anything bad, nothing at all. I think like if you want a little cheapy option, August 32, 33 calls. Just saying. I think there's some pretty good risk reward on that. I don't know what Leisha's little magic charts say, but that's why I always ask her because I can never do it. But it does, again, I cannot find any news at all. It's had a lot of good earnings. So
and they don't have a lot of
my pick. Good stocks. I don't know if you saw my Regeneron from last week. I think it was trading 550. I think we're trading 600 now.
And this company
biotech kind of pulls back, trading 608. Not too bad of a stock. I bought some more of that too. So you have, the market's going nuts. You got to look around for stocks that are good stocks, good companies, make money, and they're just selling everything because they're freaked out. So keep your opportunity radars flashing. There you go.
Well, you have a really good price to earnings ratio. 10. It's got a price to earnings ratio of 10, and it's social media. They don't have debt.
I know. I don't get it.
They don't have debt, and that's the big one. And you're right. They make a lot of money. This is a good long-term hold. And I know Lauren uses Pinterest some. Leisha, do you use Pinterest?
I totally get their emails, and I always look at it. I look at what they're sending me, and I open it. Yes, I actually do. It's kind of fun.
All right.
Andrew,
what's on your
fashion?
Wow, which is like 0 time. Like that never happens.
Andrew, do you have a chainsaw pin board of like chainsaws you want to own? That's what the crowd wants to know.
You know what? I've seen kind of these. You can take your chainsaw and they soup it up. They can soup it up. That's kind of like my dream, I guess. But I'm not. I haven't done it yet.
The pimped out chainsaw. I love it.
A pimped out chainsaw. Is Pins better than Reddit? Well, I bought more Reddit too, William. I actually bought Reddit in the 80s.
Yeah, me
too.
Like
Mark, remember we first saw it and we're like, oh man, if this stock ever gets 100. I had some GTCs in from like December or something.
Yeah. This
and
stock
they all got filled.
I said this stock gets to 100. I'm buying as much as I can. And I did. Pins really interesting, Andrew. This is a good one. I kind of like the play. We're gonna take a hard look at this one. Speaking of hard looks, a soft look is coming from our favorite Canadian. Yeah, you heard me say that, Justin. Our favorite Canadian, Hans J. Albrecht. Hans, what are your thoughts on this market? And I know that you want to take a look at one of those kind of downturn-proof names, a name that has served you well in at Option Pit Turbo Income. Why don't you talk about what you're looking at?
It has served me well, and you know what? If it ain't broke, don't fix it yet. Wait for the market to tell you that you need to fix it. So, it's tough. It's been a tough market, but lately I think we're experiencing one of these great examples of climbing the wall of worry. Right? We are climbing and climbing. We have taken off some of those existential risk problems that we were worried about at 4,900, and we're back to kind of, there's a little bit of hopium being smoked that they're going to come to some sort of deal. Hopefully one by one, we'll start seeing deals, and then that's going to be positive. From a headline standpoint, there'll be a positive stream of good things coming out. But we're coming off of, VIX 60 and daily ranges that we haven't seen since the global financial crisis. So I think there's been some room for a little dialing back of fear. But having said that, there's still, the 10-year is still where it is. The VIX futures curve is improving, as you mentioned, Mark. The US dollar, I'd like to see that rally a little bit to confirm. Credit spreads are kind of narrowing a little bit. So, apart from all that complicated stuff, I think things are looking okay. But, you look at like earnings revisions, they're coming down and stuff like that. So I think there's, I think for me, the market has rallied back. That's wonderful. We've done really well. We're 6 of 6 trades in Turbo Income, so we've played this very well. but I'm just kind of getting maybe a little bit more defensive here just before, I want the market to show me that it's starting to get a little bit more comfortable with the level. Everyone's kind of looking at that 5,500 going, that's got to be the top. So in my view, I think there's still potential for a little bit more of an unwind of that bearishness. We push a little bit higher just to confuse the bears a little bit more. So, but along the lines of what I'm thinking for the rest of this year, assuming that it's not going to be smooth sailing the whole time, is I'd like these names, right? My Netflix name from last week, that was my pick. That hit all-time high. So I've been pounding the table about that for a while. And Costco is kind of almost in that category of like kind of almost growth defensive and like a safe harbor kind of stock that that doesn't get affected as much by tariffs and things like that. Now, Costco, of course, it's goods. It does have some tariff impact, but let me tell you what's great about it. So it's a member-driven model that leads to recurring resilient revenue, right? So a lot of people maybe don't realize that a giant bulk of their revenue comes from their memberships. So those renewal rates. And people are very, very loyal. In good times and bad, people are very loyal. They don't get rid of their Costco memberships, which is, of course, why would you? In good times, you'd like to save money, and in bad times, you have to save money, right? So you're not going to give up your membership. So you have this sort of very nice kind of trickle drip of revenue type kind of model that people are going to like in a difficult environment. And so you have this scale as well, right? Costco is like a Walmart, like these big companies that have these, they're able to negotiate these great supplier prices, and the massive volume that they do just gives them more and more scale advantage, as well as that consumer goodwill that I talked about. So strong free cash flow. We talked about valuation on pins. Valuation is not its strong suit. Okay, so Costco is like a 50 multiple. So this is not a cheap stock. But if we continue to have a difficult environment, I think investors pay up for that quality, that certainty of revenue, and that sort of defensive safe harbor nature that Costco has. So that's kind of my pick right here. I like it. I think you can go from a turbo income standpoint. We've got a trade on, but I'm probably going to add another one. And I'd be looking at, June's about what, 55 days? I think about 55 days. And you could sell, maybe like an 890, 880, grab about $1.50. That targets about 17 to 18% return on that trade. So that's something you could consider if you want exposure to a really great company like Costco.
I like that as an income play. That's a great income play. Flip into my screen, please. The pins trade, I really like that as an investment. I'm not sure on a trade whether that's going to make the kind of move. Earnings are the 8th, so we got that in the way a little bit. I'm not sure it's going to do anything until earnings, but those earnings are probably going to be good. So if you're sitting there and asking yourself, do I want to own some pins upside, some pin stock or pins upside? The answer is yes. However, with earnings coming up, it doesn't make as good of a trade. IWM, I've already kind of laid out. I'm already long it. It's already making its move, which leads us to IBM. And, so Hans's put spread, brilliant idea. If you're in turbo income, you're in good hands. He's going to be back on Friday talking income with you guys. Andrew's idea is a great investment. He's on top of a great trader. He's a great investor. I like that idea. I'm probably going to go buy some pins. Just being honest. However, from a trade perspective, I really like Leish's idea on IBM. The risk reward there is awesome. Leisha, do you have a time frame on that 243 target?
Implied vols come down quite a bit. The price of the options has come down quite a bit.
Yes, IBM is now kind of in the zone. So I'm doing a special situation starting Wednesday, and it's going to be all post-earnings plays, similar to what we're looking here at IBM. And the reason why I love waiting for earnings, and Alicia pointed this out, this red line is implied volatility. Another name for implied volatility is the price of options. It's option prices. Super simple, super easy. Option prices on Apple have not been, or on IBM have not been this low since February. So they're pricing IBM options like the last month and a half never happened.
Yeah, I agree. Especially the May 16s and the June 6th.
Yeah. Back in, and here's my point, right? So IBM option prices, call it 25. Last time it was there was end of February. All right. Now, VIX is our measure of overall option prices for the market. So the S&P. Currently, it's about 2049. Back in February, when IBM was at the levels that we just discussed, option prices for the market as a whole were 18. So market prices are still really high for options. And IBM is normalized. That makes those options really attractive, folks. Makes me want to own them.
I agree.
Well, thank you. I would hope you would, considering I'm doing your stock. If you didn't, I'd have a problem.
I agree with you on the price of the options.
Yes. So, Alicia, are you thinking like Friday? Are you thinking next Friday? I like this week as a whole to go up.
I would consider taking it a little longer term to give it a chance to trade up $12. You know what I mean?
All right.
I would consider maybe beginning of June or May 16. May 16th, yeah, that gives you some time.
About 18 days till May 16th. May 30th, you have a little more time. I'm looking at these 235 calls. All right, here we go. The May 23rd. So these are going to have 25 days to expire, basically a month. And I'm paying $5 for one call on the May 23rd, 235 call. Alicia's right, and in the next 10 days, this thing goes 242, which usually is. These calls will near double. Yeah. Super easy trade. Super fun. Should be quick because Alicia's trades are usually fast acting. It's not as easy to find a cheap option in this market, but $5 on a $2, 25 days out, the stock is $235, and the calls are 0.5% out of the money.
Yeah,
that is not expensive, folks. So
I like IBM's quantum exposure, Mark. I like it's kind of made them a little bit hip again. It's kind of made them from big blue to big new. I just coined that right now.
IBM, I like that, big blue to big new. IBM is always at the cutting edge and then gets rid of the technology before it can get to to showing its use case.
That. Yeah,
they'll have. I mean, it's amazing. I got a neighbor that works there, and their culture is really weird. It's just like we innovate, and as soon as we innovate, we decide we're not going to do anything with it. So
that's like my golf game.
Watson was
I'm really
20
great
years
for
ago.
I was going to say it's like my golf game. I'm great for 17 holes, and then I take like a 20 on the last hole.
I mean, just stop at 17
years ago.
That's right. Yeah,
beating,
or just stop at the first 9.
Yeah, it's true.
So, all right. So for IBM, we're buying the May 23rd 235 call for $5. Now, let me update you on our free portfolio. Amazon is flattish to up. Our Amazon 195 calls are right around $5.20. So we'll say we're down a couple basis points. Our Google calls are a different story, though. We bought the 175 calls for January 2026. Those calls are up to $12.80. I know I wanted to get 15 out of it, but I'm going to take the easy win and know that I'm still long. I've got that IBM exposure now, and I've got that Google exposure, and so I am just going to sell my call at $12.80. Take the win, right? Why fight it? Good. So we made 49% in a week. on that. And I still have high hopes for Amazon. I will be closing Amazon but before Friday, though, regardless. Before their earnings. The earnings are the 1st. So that means I've got to close them by Thursday, and I will be doing that. So there's an update on our free portfolio. I still like those Google calls long term, but $5 in a week is $5. That's $500 on one call. I'm going to take it.
Pretty
all right.
good.
Do we have? Yeah, William says nice profit in Google. Yes. Do we have any questions for us? So I'm going to input this trade right now in IBM, and then I'll go out and find it in a little, I'll find it here. May. I can't believe it's May already. Can you guys?
I know.
Almost.
I mean, to be fair, the last month has seemed like a century. So.
Been a blur.
This is true.
All right. And now I have added this into our portfolio so that you can now see it. Leisha, we are taking your calls. And there you have it. Did a Google call spread last week. Closed it Friday for 50% profit in 4 days. Nice, Northport, Florida man. We love that.
Very good.
Hey,
right.
Mark, I remember you were talking about this with the Mag 7. Google is now solidly a teen PE.
I think it's so cheap.
It is
now they've got risk,
teenager.
right? They have AI. They have real risk on the AI front. But it is really cheap, and I believe YouTube is their most valuable asset long term. I mean, think about it. We're going to post this on YouTube.
Yeah, like what else does Google own besides YouTube and I guess Android?
They own a lot. All right. Well, everybody, there you have it. We are buying IBM calls. We broke down the market for you. We like Pinterest as a long-term investment. We love Costco as an income play. You can check Hans on Friday for that. And then tomorrow, Tuesday, Leisha is joining me for our State of the Market. Where she is going to break down the exact levels she is watching in the S&P 500, in the Russell, in the IWM in detail. We're going to kind of parse through them. And then that'll be your opportunity to get one last swing at joining her masterclass. You can click the link in above our video here or pin to the chat. And if you, maybe can squeeze one or two people into my masterclass, give my team a call, 888-872-3301, and talk to them about getting that top-notch trading education. All right, folks. For our one and only Leisha J. Leslie.
Thanks,
and,
everyone.
of course, Andrew T. Giovanazzi and Hans Albrecht. I am Mark Sebastian. I am your only option. We hope you have a wonderful trading week.